What we're witnessing real time is a tokenization of assets. There's a lot of noise of what's going on with the crypto sphere, but I would say on the legislative front, specifically in the US, we've already seen what's called the Genius Act, which is the stablecoin legislation. But why that legislation is so important is that it's the first time the United States has allowed financial innovation in the context of the banking sector that is not state controlled since the turn of the 19th century, meaning startups can now innovate on financial rails. Historically, you need a bank charter, you need a ton of capital, you need what's called a Fed window, Fed open market account. These are all things that are basically gate kept. And what the Genius Act did was said that for a lot of what we would call neo-banks or fintechs, banks like Mercury, Stripe, Brex, etc., that you may have heard of, they now have an easier time innovating on financial rails to offer services in a way that a bank would never do because they're already rich. Why innovate? Now, the current legislation, which from everything I hear is going to come before the end of this year, is what's called a market structure bill. They are literally working to allow the tokenization of our current financial system. Chainlink is now connecting to your real world assets question. They are serving as the bridge between the credit quality of Facebook or the credit quality of Microsoft as a corporate bondholder and the ability to trade that asset on a blockchain. So we're literally living through basically what happened 25 years ago during the .com era of everything kind of moving online, Netscape having the first color browser. We're looking at this in the context of finance though. That's the part that's very different. They're trying to encourage the competition to force the JP Morgans of the world or the large institutional banks to actually have to move, because when you're in that position and you literally own all the chips, you don't actually have to do anything. Who knows whether or not it's going to ultimately be successful, but the underlying goal of the policy is to force that innovation. And so we'll wake up one day, probably in 2025, and the legislation will say that now you can start all these things on chain. If you're a crypto project with US citizens outside of the country, you can now come back into the country. You may now have like certain tax benefits. It may now be easier from the things the SEC is doing for you to take a company public. The purpose is to really kind of turbocharge innovation and create challengers for financial incumbents.